Day of all Kerala virtual conference named Navaratna, meaning 9 gems. I'm very much delighted to preside today's program. This conference holds special value because this is perhaps the first occasion in the history of Kerala where the entire conference is taking place on a digital platform. I sincerely appreciate the efforts of each and every person who brought all of us together virtually. These 9 branches are here today as one ICAI family. It shows we can do our best when we are together. As they say, if you want to walk fast, walk alone. But if you want to walk far, walk together. I must say that all preparations went on war footing basis. It was the tireless effort of CA Babu Abraham, CCM from Southern Region, CA Jomon, the immediate past chairman of SIRC, and captain of all branches along with staff of all branches helped to make this conference happen. On an average, participants for conference is 700 in number. This is of course a good number, a great start. I am sure that this conference will continue as an annual event with more number of participants and with much fervor. Topic for the day is accounting standards and in AS, an update. The accounting standards have a significant role to play in the establishment of sound financial reporting system. ASB has recently issued new compendium of Indian accounting standards as on 1/4/2020. Accounting standards needs to be followed religiously like other two standards, ethical standards and auditing and assurance standards. Needless to mention that we are blessed with two stalwarts to enlighten on the topic. May I welcome the chairman of today's technical session, CAPR, known as CAPR Ramesh, a pioneer in the field. I'm sure that all of us would be highly enriched in our knowledge and enlightened in our thoughts by listening to him. Hearty welcome to CA Ramesh sir to the event. So we are all eagerly waiting to hear from you. Every CA student reaching Chennai to attend coaching class aspire to be like MPV sir. I was also not less. I heard a lot about him from my seniors. I was more than expected to join his classes in Chennai. You are a great teacher, a wonderful human being, a very humble person, down to earth. Thanks for making me what I am today. It's my privilege to welcome my teacher, my mentor, learned speaker, CA MPV to this event. Welcome, sir.
Thank you.
I welcome, now I welcome CA Babu Abraham Pallivalil, the conference chairman. Babu sir is a real hero in our midst. We have invested almost 20 plus years in the various organs of ICAI, starting from branch, Ernakulam branch, SIRC, and Central Council with highest degree of dedication and devotion. Keep up the good work, sir. All of us here in Kerala wish we had more leaders like you, and I welcome you to the Navaratna conference. Welcome, sir. Next is our family. He is one among us. This charming, energetic young leader is more like a brother to all of us. He has always been with us to guide and drive us. Continue to be our constant source of inspiration, sir. I welcome CA Jomo, the immediate past chairman of SIRC.
Thank you, Dawood. Everyone.
Next, I would like to welcome all the delegates who have turned in good numbers. We hope to see numbers clicking in large numbers. Thanks once again for providing and proving that no pandemic can dampen our spirit. Welcome all delegates. Like all of you, I look forward to hear the discussions and learn. Before I conclude, I would like to remind two things. The first one, in case any technical issues happen, please stay on until we resume. And the second one, if you have any questions on the topic, you may post in the Q&A box. Happy learning. Thank you so much.
Good.
So now may I invite our Central Council member, CA Babu Abraham sir, for special address. Over to you, sir.
Chairman of the session, and more than that, doyen of the profession, and personally one of the sincere well-wisher of the institute who support the institute from behind. I was astonished, despite being the chairman of the Deloitte India, he was there in the examination moderation process, sitting like an ordinary chartered accountant to finalize a question paper. That's a kind of humility, despite achieving high positions. No wonder he is considered to be one of the most respected professionals, not only in India, but across the globe. Thank you, sir, for joining us. True jewel in the Apex Council of the Institute of Chartered Accountants of India. Guru for many who is attending today. I think many consider, and I have no doubt in saying that he is an immortal MBB. The kind of followers, worshippers, I would say, he has created across the country. And personally, I should be grateful to him. We two together work in the expert advisory committee. Though technically I am the chairman, but factually he chairs every other meeting. And because of him, in fact, we took over the expert advisory committee with the oldest case was 2 years old. And in the last meeting, secretary reported to the board that the oldest case is 2 weeks old. Therefore, it is that is a kind of support MBV sir has been giving. Our endeavor is any opinion coming to the institute should be turned around in 2 weeks, 2 months time, so that we give the most considered opinion. Thank you, MBV sir. I think he is also the chairman of the Accounting Standard Board of the institute, and also representing all on the matters of accounting standards. Therefore, I think today we could not have got a better speaker than MPV. My distinguished colleague in the regional council, CA Joman K. George, who is poised to take over from me. All the very best to you, Joman. Very eminent chairman of 9 Navaratna branches. 9 branches we have, and you are the true Raknas. And because of you, this has become a memorable event. Even on a session like forensic audit yesterday, I was surprised around 700 participants were there. This was the regular 700 plus is a regular attendance, and even now I think more than around 300, more than 354 has already logged in. Probably others will join after the Central Council member and Regional Council member conclude their talk. Therefore, we are extremely happy that today we are going to discuss on one of the very important topic on accounting standards. Today, accounting standards are not only mandatory for the auditees, it is the duty of the auditors also to ensure under the new Companies Act that the financial statements you are attesting complies with the all applicable accounting standards. Therefore, all 27 accounting standards you have to see that, and the institute has prescribed at the 3 levels of applicability. The level 1 enterprises, which covers all listed entities and with the companies with the turnover of more than 50 crores, and also borrowings or deposits exceeding 10 crores, and level 2 is between 40 to 50 crores of turnover, and borrowings of 1 to 10 crores, and remaining will fall into the level 3 enterprises. Therefore, and as far as Ind AS is concerned, it is a converged version of the International Financial Reporting Standards. In fact, I think sooner we may be able to rechristen as IFRS once the royalty issues are resolved, and which became mandatory from 1st of April 2016 for all listed entities, and with a net worth of more than 250 crores. And I'm sure even others will follow suit soon. Therefore, I think it is very important topic which we are going to discuss, and we have two stalwarts to educate us on this topic. I wish all the very best to the today's session, and happy learning to all. Thank you. Thank you very much.
Thank you, Babu sir. So may I invite our CRC members, Jomon sir, as he need to rush to exam center for a surprise visit. So maybe we'll be taking another 3 minutes to have a felicitation address. Over to you, sir.
Thank you, Dawood. Very learned chairman of this session, professional extraordinaire, P.R. Ramesh sir, very, very robust teacher and academician par excellence, MPV sir, the Honorable Central Council member from Kerala, C.A. Babu Abraham Kalivel, who is also the chairman of the Expert Advisory Committee, who has Dawood as a small correction. It's not 20 years, it is 27 years.
Yeah,
so now the service, ever since he qualified, he came to Cochin, he has been holding some position or the other, and he has served without holding a post also. So I think it's 27 years. So I thought I should correct that, and was continuing to render government service for all of us. And yesterday also evening, this morning he called me to say that, Joe, make sure that there's no problem with the examination centers. So all the branch chairmen, we had a common platform where we discussed and asked me to go for a surprise visit. So thank you very much, Babu sir, for all the support that you're doing. And the chairman of the host branch today, who has given a very brilliant welcome speech where we feel, all of us feel welcomed. Dawood, as MP rightly said, looking like a groom, and other 8 branch chairmen of the Ernakulam branches, very respected senior members, illustrious past chairmen, MC members, and my dear colleagues. Extremely delighted to be with you virtually on this platform on the 6th day of our Navaratna conference, the All Kerala Virtual Conference, where we are deliberating on a very, very important topic, accounting standards and Ind AS and update. As we deliberate now, our boys and girls who are working with us have started the exam, so let us pray for them. Let us wish them all the very best, and let's also pray that the examination amidst this pandemic institute has really done a wonderful job. Number of centers have been doubled, keeping social distancing in mind, additional centers. Kerala also got a lot of additional centers. So wonderful exercise done by the team in leadership. So let us hope that everything sails smooth and our kids are able to, boys and girls are able to complete the exams, though there is an option for a supplementary exam in Jan 21. So this topic, Ind AS and accounting standards, Babu sir has already mentioned that section 133 of the Companies Act empowers central government to prescribe accounting standards, and in exercise of those powers, they prescribe all the standards and Ind AS issued by ICAI. And in 143, as Babu sir rightly said, the auditors have a very important responsibility, onerous responsibility, to report that the financial statements comply with accounting standards referred to in 133. Accounting standards for that purpose would include accounting standards as well as Ind AS, and as they say, any addendum thereto, verbatim, if I may quote the section. So both the speakers, the chairman and the speakers, very familiar to every one of you. They will be formally introduced soon. Extremely happy that so many of us could be together. The numbers are ticking in. Looking forward to a wonderful learning session, and learning is not just enough. Many of us, because of the extended timelines, we are in the midst of audits. So make sure that what we learn, the very, very valuable inputs which are given by Ramesh sir and MPV should be applied at the work desk. Only then that the quality would percolate down the system, and with that we would prove ourselves to be judges on financial information, and the entire governance system would stand enhanced in quality. And therefore, I'm sure, looking for, quite like every one of you, looking forward to a wonderful introduction by Ramesh sir and continuing session by MPV sir. Wish this program all the very best and a wonderful success it so richly deserves. Thank you, everyone. Happy learning.
Thank you, Joman sir, for a good message. So before I invite session chairman, Ramesh sir, may I invite our vice chairman of our branch, C. Arun Subramanian, to give a formal introduction. Over to Arun.
Good afternoon, all. I take this opportunity to introduce the session chairman, P.R. Ramesh sir. P.R. Ramesh sir was a former chairman of Deloitte India and also a former member of Deloitte Global Board with over 40 years of experience in the profession. He is a fellow member of the Institute of Chartered Accountants of India and has also been associated with various regulatory bodies, industry bodies, and Institute of Chartered Accountants of India. The regulatory bodies in which he was associated being are follows. He was a former member of SEBI Committee on Disclosure of Accounting Standards. He was a special invitee to the National Advisory Committee on Accounting Standards. He was a former member of Technical Committee to review the form and presentation of balance sheet for Reserve Bank of India. He has been with a member for the working group of harmonizing IRDA corporate governance guidelines and disclosures with the New Companies Act 2013. He was also a former member of Insurance Regulatory Development Authority and a standing committee for accounting issues. He has also served in various industrial bodies, which includes National Council Committee of Financial Reporting, Committee on Economic Affairs, Committee on Regulatory Affairs and Governance. He was also the past president of Bombay Chamber of Commerce and Industry. He is also associated largely with various professional bodies, including Institute of Chartered Accountants of India, was a former member of Accounting Standards Board of Institute of Chartered Accountants of India, was a past member of Vision and Restructuring Committee of ICAI, Auditing Practices Committee of ICAI, past member of Secretarial Standards Boards of Institute of Company Secretaries of India. He has lectured extensively throughout India on various programs and workshops conducted by Institute of Chartered Accountants of India, Reserve Bank of India, and Confederation of Indian Industries, and also have handled various papers abroad on variety of subjects, including accounting and auditing subjects. With these few words, I introduce the second chairman, P.R. Ramesh sir.
Thank you, Arun. So let's all join our hands to welcome to our session chairman, Ramesh sir. Over to you, sir.
Thank you. Central Council member Babu, a person for whom I have of highest regard and a close personal friend, I must say, because there is not any week which goes by without my having just to check on how he's doing, and hearing his voice itself is so inspirational or positive. And Babu has time and again been very courteous, kind, and invited me to Kerala, and this is one more opportunity for me to be in God's own country. Thank you very much, Babu. MPV, as everybody else said, he is a walking encyclopedia on accounting, but that's not all. One of the finest human beings. I've yet to see a person who can be so calm, so cool, but more importantly, I think he has that potent combination of clarity of thought and clarity of expression. You get people who have clarity of thought but not clarity of expression. You have people who can speak but can't think. But here you have this potent combination. It's almost like it's like Saraswati in human form in a way, of course in a masculine form. Apart from that, again, I have witnessed MPV at very close quarters, and I've learned a lot from him. Though, of course, like many others, I have been unfortunate not to have been taught by him. But my very association with him over a period of time has been a lot of learning. Juman George, thank you very much. And it's again a privilege for me to be an honor to be part of this program. Dawood, chairman of the host branch and chairman of 8 other branches of this Navaratna conference, distinguished members, ladies and gentlemen, a very good afternoon. This topic, accounting standards in India, continues to be important. I've always held a view that this is one of the most important topics. The reason being, accounting is at the core of everything that we do. The starting point is accounting. If you want to analyze performance of a company, you will need to look at accounting. If you want to invest in a company, you will need accounting. Valuation, the basis is financial reporting. Accounting produces those numbers. You want to file a tax return. Your starting point in compiling a tax return is accounting records, financial statements. And you'll find that every commercial activity or transaction has a foundation in accounting. So accounting is the most critical, and it is therefore important that we not only should get it right, that we not only should have deep knowledge of accounting, we need to be constantly updated in accounting. But why is it that if this is such a subject, why is it that this is so difficult? It is difficult, and I can tell you anybody can speak on accounting if it were rule-based standards. Accounting standards are principle-based standards in India. A rule-based standards, all I need to do is tell you what the rule is. But a principle-based standard needs to be explained, and it is for us to understand the principles which are enshrined in that standard. You will not have rules often within that standard. And all of these standards are principle-based standards. They deal with recognition, they deal with measurement, they deal with presentation, they deal with disclosure. And over a period of time, even after having migrated to Ind AS, which is the IFRS equivalent, there has been a sea change from the time I started learning accounting to what we see now in terms of codified accounting standards and Ind AS standards. Not only has there been the sea change, but the complexity has been significantly enhanced. We have moved away from a lot from what has been cost to fair value. Cost, as you know, is reality, fair value is opinion. But what are the challenges, and why is it that I'm laying this foundation? I would like you all to look at accounting standards not by the text of it, not what is stated even as a principle, but to look at it in the objective of all, why is it we use it and what is it we need to do? If we as a profession have to succeed, we have to be relevant and we have to be reliable. You may be reliable, but if you're not relevant, nobody wants you, however much your quality may be. Equally, if you're relevant, but it's of poor quality, then again, nobody wants you. So you need to be both relevant and reliable, and therefore you need a set of high quality standards, which are not only relevant, and because of their quality are extremely reliable in presentation of financial statements. Having said this, and I talked about recognition, measurement, presentation, and disclosure, there are a number of challenges. And we have to understand this accounting standards and look at it in the context of the challenges. In the context of what we do. The single biggest challenge for us is for whom are we preparing financial statements? Who is the user of the financial statement? Users are far too many. There could be a banker, there could be a taxman, there could be government, there could be investors, shareholders, employees who use it to exercise stock options. So once you know for whom, then the next question comes, for what? What is the purpose? Is it for accountability or is it for decision making? That debate, unfortunately, has not yet rested. And the changes you're seeing in accounting standards are significantly towards addressing this issue. Now, when you're looking at accountability, you're looking at past performance, you're looking backward-looking, historical, and that will therefore significantly be on a single measure, which is cost, or maybe to even if it is fair value, but it is not so much futuristic. But if you have to use financial statements for decision making, which is where the biggest challenge is, it has to have data which is current and therefore relevant. And unfortunately, the accounting standards are not necessarily designed for that purpose. That is one of the challenges which the profession is still grappling with. Can I look, if it's a 100-year-old company, you'll have fixed assets which are purchased 100 years ago and maybe at cost. Can you look at the balance sheet and then say this is the value of the company? The answer is no. Can you look at any balance sheet and P&L and cash flow and then even use it for future projections? May not necessarily be possible. Maybe partly possible. If you have lost a principal customer or you have vacated a low rented office and moved into a high rented office in the last month of the year, it won't reflect in that year's P&L. And you will not even know what will be the next year's P&L because that information is not available in the financial statements. So the problem has always been for what? Whether for accountability or for decision making. So and then a third dimension. The third dimension is our own creation, which continues even today. The choices within an accounting standard. Whether the choice, a simple example is a depreciation. You have methods of depreciation, written down value method, straight line method, all that fine. Net result is what? You will have the same asset held by two companies purchased on the same date, but having different values because one is straight line, the other is depreciation is provided on written down value basis. Look at it from a user's perspective. He's looking at financial statements and then finding two different values for the same asset. So is comparability possible? Not easily possible. You and I as accountants know that, yeah, we need to look at accounting policy. We need to see what disclosures are made, make the necessary adjustments, make corrections to the values to then be able to determine what it is. Because not only is the asset value different, the P&L will also be different because of the way the depreciation happens. I'm giving you a very simple example. So the accounting choices we exercise over a period of time add to the complication that in that same thing, the measure could be different at different points in time. And so although we say accounting is the language of business, unfortunately that language has far too many dialects and could produce different results. There was a time when if you produced the same financial statements on, say, in AS, accounting standards, and you presented the same set of financial statements on whether it is US GAAP or IFRS, it is possible that one would show a loss, the other would show a profit. So the simple question is, what is the company's performance? Is it profit or loss? You will say, no, it is profitable if it is on AS, it is not profitable if it is on Ind AS. From a user's perspective, I want a single message. That unfortunately continues to be the challenge. And then there are many, as business models emerge and a whole host of things, newer type of transactions come in, it's adding to the complexity. You have a more recent new standard, which is the standard on leases, which is on the basis of right of use, which recognizes assets and liabilities into the balance sheet differently from how it was being recognized a few years ago. So overnight, the balance sheets have been transformed. Again, whenever such changes happens, it doesn't mean that previously it was wrong and now it is what is shown is right. It is that the measures were different. At that point in time, you were measuring something differently. Now you're measuring differently. It happens to all of us. So it's possible that you step on one weighing scale, you are normal weight. You step on another weighing scale, you are overweight. And that's exactly what happens sometimes when the standards change. So we have to continue to deal with this and continuously improve upon our standards to make it more relevant and meet the user's need. Additionally, what has happened is the fact is there have been a number of corporate collapses, there have been allegations of financial reporting failures, and credibility on financial reporting is significantly impacted. It is not because, in all cases, because of failure of standards. It is misapplication of standards, or which has perhaps been the result. And though there was a time when financial crisis happened because and the whole global financial systems collapsed, financial services companies, many of them went bankrupt. There was an allegation then that accounting was pro-cyclical and caused the actual downfall. Because whenever you mark to market and the market went lower and lower, then it showed poorer and poorer results and actually caused the market to go lower and lower. But I don't believe accounting is pro-cyclical, but that's another subject, thought for another discussion for another day. And that is why I would say we are very fortunate to have MPV to talk to us about AS and IND-AS and give us an update. He will take you through all of the complexities, and knowing MPV, you will be able to, understand it in very, very simple layman's language, which I'm also eagerly looking forward to. I will not take a lot of his time, and I'll pause here and request MPV to take on the session. I may come back at the end, and maybe when we deal with question and answers, we're all there. MPV, over to you.
Thank you, sir. Thank you, Ramesh sir, for opening remarks. So before I invite the speaker for today's session, I call upon treasurer of our branch, CA Mujibur Rahman, to formally introduce the speaker. Over to Mujibur.
Very good afternoon to all your fraternity members. I'm very happy to introduce our MPVs are here, our mentor, our teacher. Last time he came to Kozhikode for as inaugurating for the session SICASA program as a SICASA chairman. I'm very happy because of his presence. That was a good seminar, and he's made a good crowded, doubled the count of students also. They are very happy for his presence. And again, I'm very today. There is no need of introducing him for the fraternity, but as a customs we are introducing, and everybody, most of us who are attending today's session, all are might be students, and all know MPVs are as a good human beings, as a good teaching, especially from the academic, and as a person, as a fraternity here, his advice is very helpful for all. MPs are is a member of faculty member of ICAI and company secretary and cost and management accountant. Is in the council, central council, for the second time 2013-16 and 16-19 and 19-22. Presently, he is the chairman of Accounting Standard Board, vice chairman of Expert Advisory Committee, and nominee member of SAFA Committee on Accounting Standards. He was previously held so many positions. He has chaired Valuation Standards Board, Digital Accounting and Assurance Board, Financial Review Reporting Board, Committee on Accounting Standards for local bodies as a vice chairman, Financial Review Board and vice chairman, and nominee member of NFR as an ex-official member, and Quality Review Board, CPE Committee on nominee members, and he is a member of Auditing Assurance Standards Board, Board of Studies as various bodies for the ICAI. Is contributing as a member, and is a member of IFRS Advisory Council for the 1921, and is a member of Small Medium SMEIG 2020-23. As everybody know, he has a work experience of 27 years as in the industry and as a practice. He is presently CFO of a CPE and previously practiced in the Yoganathan and Ram LLP. Before that also he is in the industry as a Sundaram Finance. He is a director in around 6 companies, as a presently directorship is holding as a director. And as everybody told, he is a very much a resource person. Various bodies and various students. We also benefiting as a resource person, because moreover than central council member, he is a resource person. Today also he came for a speaker. He's humble like a simple speaker. Only because of his passion to the as a resource person, he's got so many awards. Best CFO, top 100 CFO awards, and Confederation CIMA awards, and he is presently associating with various bodies as Confederation of Indian Industry with NASCOM, and he is published. He is the author of around 10 subjects, core subjects, mainly for students and faculty members for the fraternity. Various subjects as accounting standards, ethical boards, ICDS, so many subjects is covering. And moreover, everybody is a student. We are eager to wait for you sir, for your this expert subject, because this accounting standard means you also very interested. We all know. With the few words, I am introducing MP sir. Over to chairman for introducing MP sir. Thank you.
Yeah, thank you, Muchir. So we are sure that next 75 minutes will be a really learning session. So over to Vijay Umar sir, floor is yours.
Sure. Thank you, Dawood. Dawood, now it's 3:40. I need to conclude at what time exactly?
So 4:50 is okay, sir. Yeah.
Perfect. No problem. Whatever time you tell. Whatever time you tell. Fine.
Okay.
So 4:50, I'll stop. Okay, fine. Thank you. So thank you, Muzib, for that.
Balance 10 minutes for interactions.
I think PR also wanted to give some closing remarks.
No,
Then
no,
probably,
I don't think there'll be a need for.
you can start 5 minutes early, sir.
No.
Take your question.
Members should know that little perspective, future perspective. So I can present.
Allot 5-10 minutes for question answer, sir.
So I'll close at 4:45. I'll close. Okay,
Yeah,
fine, no problem.
fine.
I don't think you have to be that time bound. 5 minutes, 10 minutes extra on a topic like this should be okay. I think members should understand. So let us not put a break before we start. MBV sir, please go ahead. I'm taking that freedom and the authority which Babu sir always gives me to make that statement. Back to you.
Thanks, Zaman. So thank you, Mujib, for those kind words of introduction. But equally and more importantly, maybe some of you might be aware, because I had few sessions, I had opportunity of personally interacting. But for me, being within the ICAI organization as a functionary, it was very important that you had someone who actually is able to embrace you, give you the comfort that you have come to a place where you will be guided appropriately. That kind of a support was given to me by Babu sir right from day one. In fact, last term I had the opportunity of working with him under FRRB. I was not the vice chairman of FRRB, but I'm sure he would recall that compared to the historical trend. So that was a great experience. And currently in EAC, he's been so humble that he's given space, but I should tell that his vast experience of audit has been extremely useful, and more importantly, the way he administers the staff and gets things done is what has actually made the difference. And beyond this, I think he's been a great personal friend, and but for him, I think I wouldn't have enjoyed being at the council as much as I do now. Thank you, Babu sir. And thanks, PRR, for those very kind words. Thank you, Babu sir. Thank you, PRR, for those very kind words. In fact, as you spoke, I don't know when was the last time I actually had tears in my eyes, but I don't know why, but it did come in my eyes. Maybe one way is it puts that much of responsibility on the shoulders, but gifted to have always nice people around. In fact, I keep telling everyone, if there is something you should always pray for, is to have nice people around, because they themselves will ensure that your thoughts are nice, your actions are nice, and you're accountable to them. So that way, I'm so gifted to have people like you who have always mentored me, and I've seen you, and every time I see you chair a meeting or participate in a meeting, I try to my best to get closer to the way you do. Of course, I still have a journey, but I'm sure I will do my best to ensure that you feel proud of me, that you have mentored a right person. Thank you, PRR. Thanks, Zomon. Thanks, Dawood, and all others. Thanks, Roy, in particular, also, because he's been coordinating and chasing me continuously, actually, for the event. Thanks, Roy. Thanks to all the chairmen of the 9 branches and managing committees for the invite. And greetings to all the members present here. Trust all of you are safe and your near and dear ones are keeping good health. Greetings to all of you. What I would do is I have two slide decks with me. One is a deck which gives an update on Indian accounting standards and accounting standards, and another deck on expert advisory committee opinions. Strictly speaking, each of them is a minimum 3-hour presentation. What I will do is I'll try to speak on the important slides. Rest of it, I'll leave a copy behind with the Ernakulam branch, and I'm sure they'll find a way to reach out to you and you'll find it useful. More particularly the EAC opinions. In fact, the EAC opinions deck has been exceedingly well prepared by the staff of the office. Per opinion, it's in a single slide, and they've done a very nice job. Before I get to speak on the topic, just a word of caution from my side. Whatever views I would express, they're all my individual views as a professional. None of them should be seen as views of the Accounting Standards Board or any of the committees or council of the institute. I'd just like to begin with, in fact, PRR was also mentioning this. Maybe some of you have heard me on this, and I would repeat this because everything in accounting has a linkage to these three elements, which for me have been guiding principles. First and foremost, I believe accounting, whatever you record, whatever you account, and eventually financial reports is accountability. It's all about we being accountable. The profession requires us to be accountable, to be answerable. And PRR mentioned accounting is the base for be it audit. Audit is done as per a framework of accounting standards, whether it's for tax measurement or governance, valuation, and the like. The third element is a very important one. Financial statements are a communication. In fact, as PRR mentioned, the subject is still evolving. This, in fact, we have not yet settled down on what exactly should be the end objective of financial statements. I think it's continuously getting debated. But in my view, some fundamental elements is that financial report, your financial statements is a communication. And as a practicing auditor, when you express an opinion, that is a communication. Just like individuals, each of us expect a communication we receive to be truthful and complete. The financial report, the statements, balance sheet, income statement, cash flow notes, and audit opinion should also be truthful and complete. And that's the endeavor. Now, what I would do now is give update on the Indian accounting standards and accounting standards in the recent past, more specifically in the last 2 years. The host of changes have happened, but I'll focus on some of the important ones. So beginning with a major amendment as far as Ind AS is concerned is the standard on leases, which standard replaced the erstwhile standard Ind AS 17. As far as the new standard is concerned, in very simple words, lessor accounting, there is no change. In simple words, as far as lessor is concerned, the accounting remains the same as earlier. As far as lessees are concerned, earlier accounting was based on whether it was classified as a finance lease or operating lease. But with Ind AS 116, for lessee accounting, we have what is called a single accounting model, single lease accounting model. And for lessee, the classification of operating and finance leases has become irrelevant now. So irrespective of how the lessor accounts, lessee will account it in only one way. The reason why this became important was over a period of time, based on extensive research done by IASB and other investor groups, it has been found that there are lots of off-balance sheet liabilities, particularly operating leases, where a huge amount of liabilities sit outside the balance sheet in terms of future rental payments. And it has also been observed that when the credit rating agencies when the banks evaluate financial statements, they have always brought those off-balance sheet liabilities into the books and calculated the ratios for the decision making. So we had a situation where we were producing something, but it was actually not being used by the stakeholders. And in order to stay relevant, to borrow the expression which PRR used, relevant and reliable, to stay relevant, it was important that we make this particular change. So International Accounting Standard Board made this change and we followed suit here. So as far as the single lease accounting model is concerned, what it does is every lease which you take, subject to some exemptions of low value leases and all, this is an update session, so I'm not going into details. So what the standard does is, if I have taken an asset on lease for 5 years, then that particular asset, whatever I have agreed to pay for this period of 5 years, there's a present value of that particular amount. So for that present value, you recognize an asset in the balance sheet called right to use asset, and you create a liability. The liability will get amortized over the lease period, and the asset will get amortized over its relevant useful period. So between IAS 17 and IFRS 16, which is Ind AS 17 and Ind AS 116, finance lease accounting more or less remains the same, but operating lease, earlier it used to be in the balance sheet, and now in IFRS 16, it gets recognized in the books as far as lessees are concerned. As regards the profit and loss statement, for finance leases, earlier we used to recognize the lease payment, what is attributed towards principal in the form of depreciation in the income statement, and interest used to come as finance cost. If it was operating lease, the entire rental was accounted as part of your rent expenditure operating cost. But now in the single lease accounting model, which is IFRS 16 or Ind AS 116, all leases, whether finance lease or operating lease, the lease payment will be split as principal portion, which will be recognized as depreciation, and the interest portion, which will be recognized as part of finance cost. Between the Ind AS 17 regime and Ind AS 116 regime, at a PBT level, there wouldn't be much of a difference except subject to the payment behavioral pattern, except that a ratio like EBITDA, a metric like EBITDA, will now look much better in Ind AS 116, because what used to be accounted as a rent expense, operating cost, now comes below EBITDA as a depreciation element and an interest element. So impact on P&L, as far as the accounting was concerned, what you see as light blue shade, earlier we used to amortize it as operating lease across all the period. But now since you amortize it partly as interest and depreciation, this would get spread over a period, and totally it will remain the same, but between years there could be some small difference. Equally important on the cash flow statement, for finance leases there is no change, but as far as operating leases are concerned, earlier the rent paid was shown as part of your operating activities cash flow. Now the same payment will be shown as part of financing activities cash flow. This is a little busy slide. It may not be very clear to all of you there, but this is a slide prepared by the International Accounting Standards Board, where they have shown before this new standard and now, how would the balance sheet look like and the P&L look like, which is more or less the same which I mentioned to you. Now let me come to the other important updates. One of the very important updates is this update on what is called interest rate benchmark reforms, popularly referred to as IBORs, interbank offered rates, what popularly called as IBORs. All the members here would recall that in 2008, when we had the global financial crisis and the events following that, it has come to notice that some of the large banks had played mischief around some of these interbank offered rates. So the Financial Stability Board has taken a decision for arriving at fresh interbank offered rates, and that work is in progress. And these interbank offered rates are from the current LIBOR, just for ease of connect. Something like LIBOR, which we have now, will all get replaced by a fresh interbank offered rate by end of calendar year 2021. It is expected that by end of calendar year 2021, you would have a fresh interbank offered rate. We are all aware that companies who have foreign currency exposure, whether it is receivables, payables, loans, some of these borrowings and all, you try to take hedges, and some of these have interest rates which are benchmarked to LIBOR and all. When you have this underlying benchmark rate undergoing a substantive reform, the hedges which have been taken, which you expect to give you a cover, which you expect to give a protection, those hedges may not meet the criteria of being an effective hedge, because the underlying base itself is going to get completely shaken now. So given this kind of a major change which is happening, International Accounting Standards Board has in two phases. One phase, it's already been done. Second phase, we are about to do. We are likely to complete that sometime in February. By February, we will complete it. Where in phase one amendments, which is already approved and is notified under the company's Ind AS rules, what it says is, if because of this interbank offered rates, if there is some volatility coming in, don't treat it as ineffective. You continue to treat your hedge positions as effective. So that's one amendment which has already been done, and it has been done effective 1st April 2020. The second of the updates which we have is a rent relief or a rent concession accounting, which is driven by the event of the pandemic, namely COVID-19. This became essential because FASB started this relief process. IASB continued the same, and we in India also gave this relief. What this relief tells in very simple words is, if I am a lessee, and please note this is a relief available only to the lessee. If I am a lessee and because of the pandemic, my landlord has given rent concession where he has waived off 3 months rent, or he says that this 3 months rent, you pay it along with the next 3 months rent, or pay me partly now and balance pay me along with the next 3 months rent. So these kind of rent concessions are quite common. Given the fact that IFRS 16 had just then got implemented, and in India, Ind AS 116 just then got implemented, and lessees were just settling with the new accounting for leases, IASB came up with a relief where, for a situation of rent relief, the examples which I gave you, three examples which I gave you, normally it would have been treated as a lease modification, and you would have gone about remeasuring your lease liability and all, which would have been a complex process. So if you fulfill certain conditions like the rent concession does not exceed period of 30th June 2021, you are not changing the other terms of the lease arrangement. If you fulfill those kind of conditions, then Ind AS 116 says is, you need not treat it as a rent modification, and instead the rent which has been waived, treat it as a credit to your income statement. So those kind of simplicity has been brought in inside this particular relief accounting. But please note, while this relief has been given, And in IASB, I know many were not too much in favor, and hence it was drafted with very stringent conditions so that there is no misuse. Nobody uses this opportunity of making massive restructuring changes to the rent agreement. So subject to that, this change has been done. This is an illustration, may not be too visible to you, but when the slide deck is shared with you, you will definitely find it useful for accounting. That is why I kept this particular slide. And this slide is not available generally in the public domain. It's part of the International Accounting Standards Board staff paper. But this particular illustration beautifully explains, had there been no concession, how you would have accounted, and because of the concession, 3 different scenarios, how would you do the accounting. Then other amendments, and again to borrow the expression what PRR was using, in fact those 2 expressions are extremely important. One is reliability, other is relevance. Both are very important. Now, the other amendments which have been done, the definition of the word business, they have given a little clarity to the definition so that when you acquire some group of assets, it automatically does not qualify as a business acquisition, because sometime when you acquire a group of assets, there is no input, process and output and all. That accounting should be done as per the respective asset related standard. If this clarity is not there, there is a potential risk where you actually acquire a group of assets and you would end up accounting for goodwill, which should not have happened, And for this reason, the word business has been clarified with a little amendment in the standard. Second is the amendment to this word called material, and this is an important amendment. While I am giving these amendments in the context of Ind AS, my sincere request, my sincere appeal to all the members here, even for organizations which are following accounting standards, those are following AS, the conventional AS, the accounting standards, whatever good principles are here, same principles can be used there as well, particularly the definition of the word material and all. While these words are not defined there equivalently, but we have what is called as a gap hierarchy, and in that sense, wherever there are some of these good explanations or principles laid down, I would encourage use of them, even in the context of the regular accounting standards. This word material has been defined as follows. The earlier definition of material was omissions or misstatements, which, if they could individually or collectively influence the economic decisions which are made by the users of financial statements, then you treat them as material. But in the new definition, they have added a very important word, and I fully subscribe to this word, a word called obscuring. Information is considered to be material if omitting something, misstating something, or obscuring, which means you give it, but the way you have given it, could reasonably be expected to influence the decision of the primary users of the financial statements, on the basis of which the financial information is provided. So this word obscuring is a very important addition, because I'm sure all the members present here will agree that more often than not, people try to comply with standards based on the words rather than the spirit. So this word obscuring is a very important word, because what it tries to state is, you might have stated it, but the way you have stated it and the way you write could reasonably expected to influence decision of somebody. Then also it is considered to be a material one. So that's a very important amendment which has come now. This is another amendment which has been done in Ind AS 12, and I'm happy to share that on exactly same matter, expert advisory committee had given an opinion, and within few months thereafter, we had this exposure draft on the amendment to Ind AS 12 or IAS 12 which came in, and we eventually brought it in Ind AS 12. But the same matter was deliberated by expert advisory committee, and we have taken exactly the same position which eventually came out in this IASB's amendment of IAS 12, which is our Ind AS 12. What this in briefly states is, when you have computation of your taxable income, there are many tax positions which we take, allowable, not allowable, based on some judgments in our own case, some judgments in other cases which are comparable. So there's so many judgments which are involved. So what this amendment basically says is, these amendments, these uncertainties which are there, should all be factored, it gives guidance on how to factor also, should all be factored in the determination of the taxation expense, rather than simply disclose it as part of your contingencies under IAS 37 or Ind AS 37. So it basically says all tax computation uncertainties are involved, but you should do your own judgments in measuring the potential liability which will come after factoring the probability of these uncertainties to happen and arrive at your taxation expense. Then we have this amendment on Ind AS 19 on employee benefits. There are many cases where as time progresses, there are amendments to the employee benefit plans, whether it is a pension plan, medical plan, whatever plans which are there, there could be some benefits. When those plan amendments happen, there is an impact on the past service cost, and they also impact the computation of the future cost as well. So this amendment basically is a clarification to say that whenever there are plan amendments, it has an effect on both, and the actual valuation which is done should consider the impact on both of them. Then there are other amendments. I'll be a little selective from here. We have, for example, an amendment to Ind AS 109, prepayment features with negative compensation. I'll briefly explain that. Suppose I am a lender, I have a financial asset loan given. If somebody is foreclosing a loan, they normally pay foreclosure charges. They pay foreclosure charges and you get an extra amount, normally foreclosure. But there can be instances where there can be negative compensation. So foreclosure happens, but you get lesser amount. So those cases, the earlier port standard did not give clarity whether those situations you can continue to carry the financial asset as amortized cost or fair value through OCI. So this amendment was done, allowing it to carry it at amortized cost and FCT OCI. So these are some other amendments which are there. And as ASB, we continue to contribute to the international standard setting process. We started this journey quite some time back, and happy to share that we have a reasonably good mind share. Of course, there's still a lot of hard work to do. And from the institute's side, because of COVID, we have given guidance from our side in the form of an advisory and followed it up with several workshops as well. And I just spent a minute on something which is expected to happen 2 years from now or 3 years from now. There is a project of the International Accounting Standards Board called Primary Financial Statements, which is a project where the existing IAS 1, that is our Ind AS 1, will be replaced by a fresh standard on general presentation and disclosures. As per this proposed standard, exposure draft has already been issued. Comments have been given from the institute side. We have done an excellent job in terms of having two good study groups. Then we did 2 large outreach programs. We did 1 joint outreach program with International Accounting Standard Board, where we had about 1,700 members participating for an Ind AS exposure draft, not even Ind AS, for a IFRS exposure draft. And we had the IASB vice chairperson herself address that event. And more importantly, we had 4 large Indian companies who participated in what we call as field testing. So at exposure draft stage, if the standard is applied, how will the financial statements look like? What are the issues? we had 4 Indian companies participating in international standard setting process. The idea is not just to be by number, second largest body of the world. The idea is to actually start influencing global thinking. So we had 4 Indian companies participating in that process, and I'm extremely thankful to all those 4 companies who have taken time and participated. It's not an easy one to give your time to prepare consolidated financial statements where you have some 30 subsidiaries, 10 joint ventures, 20 associate companies, and prepare an exposure draft based financial statements. And from the entire Indian accounting profession side, I'm thankful to those 4 companies. So we have this new format of P&L which will come 2 years from now or 3 years from now at headline level. At headline level, the new P&L will have what is called operating portion, where you will determine the operating profit and the profits which you get from associates and joint venture. If they are integral, very closely aligned to your business, then the profit pickup will come immediately after that, and you call it as operating profit and income and expense from integral associates and joint ventures. Then you have income from your investing activities, which will result in profit before financing and tax. Then you have financing activity or interest expense and things like that. And finally, PBT and tax expense. And please note, you should not, I repeat, you should not confuse this word operating, investing and financing with what you have in cash flow. In cash flow, it is called operating activity, investing activity, financing activity. Here they have a different nomenclature: operating category, investing category and financing category. They're quite different, and enough guidance has been given in the exposure draft. The draft is likely to get finalized more or less in the same form with some inputs which have come from across the world. But this is a very important path-breaking one. It's a transformational one. The P&L will look completely different from the way it currently is. And from the institute, we are now for the first time having a leadership role in a body of the International Accounting Standard Board called Asia Oceanic Standard Setter Group, which is chaired by the past chairman of ASB, Dr. S.B. Zavre. In fact, we have the annual meeting commencing from Monday. So a 3-day annual meeting which is commencing from Monday, which is being chaired by him. It's a 2-year leadership role. And I've been fortunate to get through the process of interviews and all in 2 of the bodies of IASB or IFRS Foundation, IFRS Advisory Council and IFRS Small Medium Enterprises Implementation Group. Updates on accounting standards. I just want to give one small caution. There are many who have this expression that accounting standards is Indian GAAP and Ind AS is there. They think it is Indian GAAP and others. Please note, accounting standards and Ind AS, both of them are part of Indian GAAP. We essentially have 3 sets of standards. Ind AS notified under Companies Act, Companies Ind AS Accounting Rules 2015. Accounting standards notified under Companies Act called Companies Accounting Standard Rule 2006, which will get now mirrored under the new Companies Act soon. Third is accounting standards issued by the Institute for non-corporate entities. So essentially we have 3 sets of standards. The second and third set of standards, what we collectively call as accounting standards, are currently in the process of getting revised. Eventually we will have 32 standards. As against 28 standards, we'll have 32 standards. Hopefully it will hit the road from 2023 after enough capacity building and all. And we will also have a transition standard also. So all the existing entities who are following existing AS, they will all, using a transition standard, move into a revised set of accounting standards, which will be relevant for the next 20 years. I'm sure all of you will appreciate that. The existing standards have got developed over the last 40 years. Some of the standards before 1998, some of them after 1998. The structure of standards are different and there's so many inconsistencies within. So all of them are getting revised so that these standards will stay relevant for the next 20 years. So we'll have about 32 standards. So some standards have already been cleared by the council of the institute. Some are pending consideration of the council. Some are now with the accounting standards board, and some exposure drafts are being issued. And I'm thankful to Ernakulam branch in particular, and I would request the other 8 branches also, for all the exposure drafts which are issued, please constitute study groups locally and please share your views. And those views, even if it is Ind AS or AS, those views are extremely useful. And you'll be surprised to note that many think exposure draft contributions come from metropolitan cities and all. I don't want to name those towns, but I have experienced in the last 5 years, there are some very small towns, and there are few members in those towns who are so passionate about the accounting profession, and their inputs have been extremely useful on the exposure draft. So I invite all of you to participate in the exposure drafts process. We are also examining a possibility of drafting a separate set of standards for micro and small non-corporate entities who largely prepare financial statements for taxation purpose and some bank credit. So this is still at a discussion stage. We have made some outreach and all. We have got a mixed view. Some people said, let's have a separate one. Many have said, let's continue with the current process and give exemptions and all. So there's no final view on this as yet. So these are some of the other activities of the Accounting Standards Board. So let me now move on to the Expert Advisory Committee opinions. And these opinions, there are a good number of opinions. I may not be able to cover all of them, but I'm sure you will enjoy the nature of those issues when you go through these later. As far as the Expert Advisory Committee is concerned, it has played a very important role in giving an independent and impartial opinion in matters involving interpretation of various accounting standards. And just for your information, I have been in EAC for all the 5 years. All the 5 years I have been in the Expert Advisory Committee. And there have been multiple instances where a single opinion was debated for 3 hours or 4 hours, not concluded, carried over to next meeting, again debated another 3-4 hours, not concluded, then further research to be done, and then opinions are given. So this particular committee, the kind of deliberations which are there and the insights, the learning experience is humongous. And I'm really fortunate that I've been part of this committee all the 5 years. And this year, it's been a great pleasure working under the chairmanship of Babu sir. His skill of the chairing a meeting is very unique. He encourages all the members to express their views very freely. In fact, he allows us to express views which are opposite views without making the views the environment hostile. I think that's a very important skill set. He comes up with this nice way of bringing the people together and ensuring that people are debating on issues rather than as individuals. So it's been a great experience, and the publications from the Expert Advisory Committee as well. There are few opinions. All these are opinions from January 2019. These are opinions relating to recognition and measurement. Then there are opinions relating to presentation and disclosure. So I'll try to cover as many as possible. This is an opinion relating to restructuring of loan. There is a pharmaceutical company which borrowed money from a government entity which holds about 24% shareholding. Before the transition to Ind AS, before 2016, before 2017, before the transition to Ind AS, they have restructured the unpaid loans with a reduced interest, and the unpaid interest amount was converted into an interest-free term loan. So whatever interest accumulated and not paid was converted into an interest-free term loan, and the repayment terms of the term loan and the interest-free term loan were quite independent. When they transitioned to Ind AS, what the company did was they took both the loans together. They treated the term loan and the interest-free term loan together, calculated the effective interest rate, and did the accounting. So the issue which came to expert advisory committee was, should it be calculated on a combined basis or should it be calculated individually? So after a debate, the conclusion was that term loan and the interest-free term loans are independent loans, and consequently the effective interest rate should be calculated separately. There is a second question, can it be treated as a government grant because it came from a government entity which held a 24% stake? The answer was no. It was basically restructuring of an existing debt due to stress. And lastly, at the time of transition, the difference between the carrying value and fair value of the interest-free term loan based on its collectability and all, based on its payability and all, if the loan was granted in the capacity of a lender, then it needed to be adjusted as part of your opening reserves or P&L. Otherwise, it needed to be adjusted against the equity, shareholders' funds, if it was given in the capacity of a shareholder. Second opinion, this is the opinion relating to Ind AS 37, provision for onerous contracts. For making a provision for onerous contract, entity needs to consider what are the costs they have to incur. Onerous contract means a contract which you have to fulfill, but you'll end up making a loss. You have to fulfill, but as you perform, you'll actually end up making a loss. It's onerous contract. So the question which came up was the administration overheads, finance charges, R&D costs, sales overhead, etc. Should all these costs be considered when you determine what is an onerous contract, or whether those costs also you should provide now as a foreseeable loss? Can we exclude that, or should we include and provide? EAC took into account the fact that onerous contract is a contract in which unavoidable cost of meeting the obligations exceed economic benefits of the contract, and these costs are the least net cost of exiting from the contract, which basically means cost of fulfilling the contract or compensation or penalties which you need to pay. So the opinion of the committee is the period costs like admin overheads and all should not be considered, and what the company did is correct, and only costs which directly related to the contract should be considered. And here again, happy to share that after the EAC issued an opinion on exactly the same issue, International Accounting Standards Board had, of course, independently, they have amended IAS 37, clarifying a similar treatment. So this is one. I'm just highlighting this portion just to tell you that there is significant amount of talent available within the country and in the institute. And the fact that similar views are being taken at IASB gives confidence to our ability to interpret the principles and apply the principles. In fact, as PRR mentioned, if it was rule-based, it's so easy. But because it's so principle-based, it requires that much extra level of understanding. And I'm very happy that there is so much of talent available within the country. The kind of contribution which we receive from people like Mr. P.R. Ramesh, other co-opted members and special invitees is very, very commendable. This is the third opinion. Impact of fees paid to third party on computation of effective interest rate. Here is a case where a public sector unit in India borrowed funds from a foreign lender, and the government of India gave guarantee for the same, and for which guarantee fees has been paid by the PSU, and this guarantee fees needs to be renewed every year as long as the loan is there. The query which came to EAC was whether the initial as well as the subsequent guarantee fees which are payable to third party shall be considered for the working of effective interest rate as per Ind AS 109. As per Ind AS 109, effective interest rate is generally bi-party between the two parties, and you consider transaction costs. And here, the guarantee fees is something which is directly attributable to this liability. Had this guarantee not been there, maybe the loan would not have come, or it would not have come on the current rate of interest and current terms. And consequently, these fees are considered as incremental costs relating to the acquisition of the loan and should be considered as part of computation of effective interest rate. This is an opinion on an issue relating to deferred tax on long-term capital gains. This is a query which came because of amendment to the Income Tax Act, where section 1038, subsection 38, the relief which was there, or the exemption on non-computation, no taxation for long-term capital gains which was there, got removed, and 112A was introduced. And members here are much bigger tax experts than me. So after this amendment, you have the concept of the deemed cost, which is the higher of the actual cost or the lower of the fair market value on the date of 31st January or the sale value. The question which came before the expert advisory committee is where these investments, these shares, are all carried at fair value through P&L. You do a mark to market, fair value through P&L, you do a mark to market, fair value through OCI, you do a mark to market. So when you do a mark to market, there is a revision between the earlier value in books and what you are carrying now. And there is a gain which is there. So this particular gain, should we consider the deferred tax on this? The opinion was that the answer is yes, because it's a temporary difference. You need to consider the same. Then there is an other issue, accounting treatment of certain indirect administrative overheads incurred during construction phase of the power plant. So during the construction of a power plant, there is salary of the senior executives, key management personnel, director sitting fees, audit fees, statutory levies. So the company's query was, can all these costs be added to the cost of the power plant and can we capitalize the same? So the opinion of the committee was that the cost of remuneration paid to key management personnel and director sitting fees should not be included because it is not directly attributable to construction of the project. Same is true for audit fee as well. But when it came to statutory and other levies, if these are directly related to the project, like obtaining approvals, obtaining licenses, then you capitalize it. Otherwise, it should go only as an expense in the P&L. This is another opinion. And please note, each of these opinions which you are seeing as one slide, when they are published as part of the journal, they typically run into 4 pages or so. And that 4 pages is a filtered version. And as I said earlier, most of these opinions typically take at least 3-4 hours of debate after they have been prepared by subject matter experts and vetted by the office. And all of this have now been so beautifully captured as a single slide. I will definitely share this with the Ernakulam branch and it should be made available to you. I would strongly encourage that you please disseminate this knowledge to your partners and staff who are not available today. I'm sure they'll find it useful. Now, coming to this opinion relating to treatment of expenditure incurred for rejuvenation of petrochemical plant. This is a case where plant was inoperative for some period, 6-7 years, it was not functioning. After that, they decided to make it operational because there was a change of business environment. It was looking, the terms of doing business was looking better. But because the factory was inoperative for a long time, they had to put substantial money to rejuvenate and make the factory into a working condition. So the question was, can this expenditure on rejuvenation, modernization, and which increases the lifetime of the asset, can it be capitalized? ESC, after debate and considering the requirements of the paragraph 10 of AS 16 and also paragraph 12. Paragraph 10 deals with the recognition criteria, which is the most important criteria, concluded that in this particular case, this expenditure fulfills the requirements of recognition, and the same can be capitalized as an asset. And the earlier asset cost, you have to de-recognize and capitalize this amount. So that was the conclusion of the committee. This is another opinion. Whether arrangement is in the nature of an operating lease or a finance lease under AS 19. This is not Ind AS. This is not Ind AS. This is AS 19. All the cases which I dealt with till now are all cases relating to Ind AS. Now, the facts of this case is the company placed orders for supply of equipment on build, operate, transfer model for a period of 6 years. Ownership of asset for 6 years will remain with the person who has manufactured the machinery or built the machinery. And ownership will get transferred only after 6 years. And the question is whether this particular arrangement should be treated as an operating lease or a finance lease. So facts of the case, the benefits from operating the asset belong only to the lessee. If there is either an increase in the value of the asset or decrease in the value of asset, that belongs only to the lessee. If there is an idle capacity and asset is not being used, that risk is also borne by the lessee. So even though ownership is with the supplier of the equipment, given the fact that risk and rewards are with the lessee, the expert advisory committee concluded that this needs to be treated as a finance lease. Provision for disputed cases. I spent time on this in the ASB related site, where I told you material uncertainty relating to your tax disputes and all. So this is a case where EAC had taken an opinion, and within 6-9 months thereafter, we had that exposure draft issued by IASB on exactly a similar matter. So both concluded the same, and I'm happy about this. Pardon me if I'm beating the trumpet, but I strongly believe, I'm so happy that there is so much of talent in the country that we have interpreted the principles the way IASB would do it. So here again, the conclusion was that while computing your taxable income, wherever there are alternate positions, where there are judgments, favorable, unfavorable, in your case, other party case and all. So all those cases you need to consider it and accordingly make a provision as part of your income tax liability itself, and not follow the easier route of making a disclosure as part of your contingent liability. So that is the, in simple words, the amendment. There are a few other small amendments, which other opinions, which I'm not covering now. Let me spend a few minutes on opinions relating to disclosure. As far as these opinions are concerned, first and foremost is opinions related to government grant. This is a case where an entity, they received a non-refundable government grant, which need not be repaid, even if the project is amended, is abandoned. So the query which came is, this particular government grant, since it need not be refunded at all, can we take it directly to equity? As per Ind AS, there's a fundamental assumption that there is nothing which comes free. Any grant which comes, it comes with some inherent requirements or conditions to be fulfilled, either immediately or over a period of time. And EAC also took into account the fact that This is not a money coming from the shareholders. It is coming from another party. So EAC made a conclusion that this grant, even though it is non-refundable, in situations where the project is abandoned, it should still be treated only as a liability and then recognized in income over a period of time. And for cash flow statement, the receipt of grants here does not change the composition of shareholders' funds or your borrowed funds. These grants have come basically for your project which you are doing. So they're largely related to your assets. And for cash flow statement, you need to show it as part of investing activity. And here again, there is a amendment in Ind AS 20 post this opinion, where earlier it was the asset related grants you had to show only as deferred income, but now you can reduce it from your asset as well. Next, classification of deposits for LPG connections. All the LPG connections, the cylinders and all, companies like HPCL, BPCL, Indian Oil and all, they get a consumer deposit. They get a deposit from the consumer. This deposit is repayable whenever the gas connection is surrendered. So there is a demand feature. So any customer can decide that he will surrender the gas connection and take back the deposit. So any deposit which has a demand feature is a current liability. But all of us in our individual experience know that the number of people who actually surrender the gas connections are negligible. There are hardly any people who surrender. So in this context, question was, could we treat this as a non-current liability? If you treat as non-current liability, the ratios and all will look good, particularly working capital ratios. And there was a huge demand from industry to clarify in that direction. But given the fact, in fact, we went through the contract. In fact, those contracts are all in such fine print. You read the whole of the contracts, and it was very, very clear that the company had an obligation to pay the deposit the moment the customer decides to surrender. Company had no way to defer the payment beyond 12 months. And in this backdrop, the opinion of the committee was that these deposits should be treated only as a current liability and not as a non-current liability. Then another amendment on income taxes recovered. Is it tax expense or should it be treated as income? The facts of the case is company is a public sector enterprise in the hydroelectric power business. And all of us know that the electricity industry is a regulated industry, and we have a central electricity regulatory commission where there's a concept of tariff fixation and all. And for tariff fixation, they take various cost elements. One of the cost elements is tax expense. So you effectively recover tax expense as part of your pricing from the customers. So what this company did is, whatever the tax they are recovering from the customers, whatever they are recovering, that particular recoveries, they showed it under tax expense. So whatever is the regular income tax expense, under that they were showing it as tax recovered, they were deducting it. So the committee considered this issue. In this particular case, whatever tax expense you are recovering from your customers, it is an asset which is coming because of a regulatory framework, and that particular costs which you are incurring to recover, those costs should be treated as a regulatory asset, and this amount which is recovered should not be shown as a deduction from a tax expense. Instead, they should be carried in balance sheet as a regulatory asset, a deferred account balance in the balance sheet, and amortized over the period when you recover the same. Then in Ind AS 108, this was the issue of, again, disclosure, where companies have multiple segments, division A, division B, or segment A, segment B, and there are transfers happening between the segments. The price at which the transfers happen, that particular price is disclosed to the chief operating decision maker. So this particular standard 108 does not have any measurement principle. It gives you freedom to price the way you want. So what the standard requires is to make a disclosure of what is the pricing methodology which has been followed. The next opinion, before I could come to a close, is a presentation of the grant receivable from government from the Serve from India scheme in the statement of P&L. The export units, the units who make exports, they are eligible to get a duty credit. They are eligible to get a duty credit. The duty credit which they get, question is, should it be shown as part of your revenue from operations, customer contract revenue? Should you show as other income? So after due debate, the conclusion was, this is not revenue from customer, this is not other income, but it is revenue from operations in general. So in that context, EAC concluded that the export scripts, whatever export benefit you are entitled, show it as other operating revenue. Do not show it as revenue from sales and all, show it as other operating revenue under the head revenue from operations, which is there in your Schedule 3 with adequate disclosures in the notes to accounts. Then is a disclosure of feedstock subsidy. This is an opinion where the company made an query to the EAC that there is a feedstock subsidy claims for previous 3 years which have been accumulated, and can we present it as an exceptional item in the statement of P&L. So as far as Ind AS is concerned, we don't have the word called exceptional and all, but in Schedule 3 you have the word exceptional, but the same word is not defined. So the exceptional items are generally understood as those which meet the test of materiality in terms of size and nature, and test of incidence. Incidence means it should not happen it should not happen regularly. Then they are considered as exceptional items. So in this backdrop, the conclusion of the committee was, this amount cannot be shown as an exceptional item. It can be shown as part of the P&L separately or under the general head of other income, considering that it is a material item, So that was the conclusion of the committee. Then we come to almost the last opinion. Disclosure of classification of late payment interest charges which are collected from customers in the statement of cash flows. I'm sure all of us come across situations where customer has to pay in 90 days, he pays in 120 days. For that extra 30 days, you collect some interest. In practice, most of us don't collect, but there are some industries where they collect. Like for example, your telephone bills and all, they automatically come as part of the bill, and you end up paying those extra interest on your overdue bills and all which are there. So question was, this particular interest which comes on this late payment charges, what should be the treatment of this particular interest? Should it be shown as cash flows from your operating activities, or should it be cash flows from investing activities? So the committee had deliberated the same, and considering if it is not a financial institution, not a banking company or a finance company, the late payment charges are more compensation for time value of money and hence it should come as part of your investing activity. Otherwise, it will come as part of your operating activity. So with this, let me conclude, and I think I'm more or less on time. And thank you all for your patient listening. And more importantly, thank you, Babu sir, for the opportunity and inviting me here. Thanks to all the chairman and managing committee members of the various branches. Stay safe, stay accountable. Thank you all.
So yet another outstanding performance from Vijay Kumar sir. So the PowerPoint presentation was also par excellent. Thank you, sir. Wonderful presentation. So now may I invite Ramesh sir for concluding remarks on the session. Over to Ramesh.
Thank you. I doubt whether I can add anything to what the MPV has said. He has so patiently taken us through all the updates and spoken about also the task ahead. Indeed, many of these standards continue to be complex. Leasing is one standard which is having a significant impact on the financial statements. My simple message to all the participants and to members would be that we need to apply these standards in the spirit for what it is. Don't look at and saying, try and interpret, conjunctions or any other words in the standard and say this is what is the meaning of the standard. Look at it in the context of why it is so and what is the spirit. You will not find answers to all what is there in the EAC easily in the standards as to whether an item should be capital or revenue. There will be a broad principle which will be enshrined in it. Look at it in the context of, is that really capital expenditure? Let your common sense tell you. You won't find that answers readily. So the first is don't abdicate or jettison common sense. Because all these standards have a lot of common sense embedded in it in the manner of principles. Only if you find there is two options in the standards, choose that which will help you better prepare the financial statements, not what will give you a better result. So don't get clouded by outcomes as much as the only outcome being better preparation and presentation of the financial statements. The third, I think most important to remember, disclosure will not solve or absolve you from an incorrect accounting treatment. Remember that disclosures are important, but you can't say I have done this and therefore you don't agree with the accounting standard, but you're making that disclosure and treating it a transaction in a particular way. I think there is a lot of wealth in the EAC material, and EAC is comprised of experts. In addition to reading standards, every member should go through all the EAC opinions issued over a period of time. And I'm really glad that MPV has taken this opportunity to present to you some select EAC opinions and is willing to share his presentation for all of us. All in all, I think it's been a very, very useful afternoon. My best wishes, and I'd hand over to the organizers to check if there are any questions.
Yep. So there's one question. Let me read out. So it's from Venkata Subramanian. So the question is in the AS12 regarding reflecting uncertainty in tax treatment vis-a-vis acceptance by the tax authority. Would it not prejudice our position before the revenue authorities? Rather, reflect that we ourselves are clear that our position is weak and not acceptable.
No, I don't think it works like that. It works like that. In fact, this was a huge amount of debate which was there. By considering the uncertainties and probably accepting some positions which eventually you believe will not be favorable to you, and making a provision does not mean that you have actually accepted it. In fact, we have lots of precedents where companies have made provision for tax knowing fully well that they will win the case as well. And those are quite independent in our view. In fact, same point was debated a lot before this amendment was incorporated into Ind AS, and I'll let PRR to add further insights. I'm sure many clients would have interacted with him on this.
No, not only in this standard, this is an age-old issue. There used to be in the past, and which continues even now, demands by employee unions, which and wage agreements would have expired. Negotiations are in progress. Now, in some cases, as you know, in particular in public sector, the negotiations go on for a very long time. And it's the agreements are reached after sometimes 2 to 3 years. And therefore, it does not mean that you don't make any provision for expected increases, which will come about when a new agreement is about to be entered into. It is your duty bound to make an assessment as to what would be the most likely outcome as to of those negotiations which are happening. Similarly, there will be many cases of property tax assessments are being disputed. You will have to take a call, saying what is more likely, what is more reasonable. That is the same issue in taxation. And MPV is right in that many companies make provisions because they feel that they may not have that strong a case. But it is everybody's right to fight for a matter. Nobody can take away that fundamental right. But you also have an obligation to assess as to whether that right is, shall I say, a fair right in terms of the outcome, or it should be, for instance, currently, as you know, there is a presidential election in the United States where certain rights are being exercised as to whether the person is elected or not elected. Now, one has to take a reasonable view as to what it is. You can still debate in courts, but are you going to? Similarly, I think in a number of issues, you will have customs duty levies which are being disputed. But that is an inherent to accounting is judgment and estimation. You can't say we will not estimate or it would prejudice your case.
So that's all from question and answer session. So thank you very much, sir.
I think I should compliment the person who asked the question. Actually, it's good that the question was raised, and PRR explained it so beautifully well with that wage example. Wage example. Just because you are providing does not mean you are conceding to a point. So you are making your own judgment, and tomorrow you may argue on a different case and end up very favorable position as well. So they're quite independent, and that's a beautiful.
Yeah, in reality, in wages, what happens is in salaries, those people are within your companies. So when you pass an accounting entry, they know. Taxman may not know. And that's news spreads like wildfire. Oh, they've set aside so many crores. So that's the reality.
Yeah, thank you, Ramesh sir, for sharing.
Actually, PRR came across a case of an IBC case where we acquired an entity. So in the resolution plan, you actually put a contingency amount saying, I pay financial credit so much, operational credit so much, statutory so much, and contingency. So I had put a particular amount as contingency. So when I completed the acquisition, there are a few guys who are turning up and saying that, look, you provided for contingency, pay me that amount because you are mentally prepared. And they're giving it as a birth rate, So that's a nice example you gave.
At least in Kerala, it will happen, sir.
Said with too many standards, our financial statements would have become more technically perfect, but much less readable. That is the.
But I have a view on that. Actually. We all expect. Yeah.
Yeah, go ahead.
Yeah, we all expect financial statements to be understandable by a common man. I think that's a very wrong expectation. In fact, I recall a paragraph, I don't know where in IAS 1 or some paragraph, where it is meant for people who have reasonable knowledge of understanding financial statements. It's like a medical report, medical report. So whether it is a cardiogram or whatever, it is basically meant for people who have that capability to understand. Like, for example, you have institutional investors, you have rating agencies, there are lenders, and they're putting huge sums of money. It's not small money. and they're all dealing with external public money. And for those people, if you don't give high quality financial reporting, you're actually indirectly doing injustice somewhere. So that expectation itself, I think we have to moderate, that it should be understandable, easily, half can understand. I think we shouldn't do that. We can do that provided the business environment is not complex. But today the whole business environment is so complex. Everyone does business based on agreements. I keep giving this example. With chairman permission, I'll just take 1 minute extra. Yeah. If you take businesses, for example, 20 years back, if you take a simple sales contract, I sell a product for 1,000 rupees, income 1,000, matter over. Today, every product you sell comes with a 3-year warranty, comes with some loyalty rights, everything it comes. So the 1,000 rupees has that element. Even a small shop has that element. For example, I think in Ernakulam branch, I was speaking a few months back. I bought glasses for my daughter a year back. That guy says that it's about 800 rupees. You pay extra 200 rupees. You can buy another pair of glasses at a 50% discount within the next 1 year. Your daughter will require, because if this is lost, what will happen? This will match her dress. He had his own logic and all. So eventually he invoiced it for 1,000 rupees. Now the 1,000 rupees has the 200 rupees of loyalty bonus. And I'm talking about a small shop selling spectacles. It was not the big Lawrence and Mayo and all. A very small shop. So when you have that kind of a business environment, and to be fair, the business people understand time value of money much better. Many times we think time value is complex. They don't understand. With all due respects, they know it. That is why they do business. That is why they do business. They know money in hand value now versus money in hand later. They know the value and they price it accordingly. It's just that we try to avoid those, and not reflecting the substance of the transaction in financial statements is not fair. Sorry for this little longish answer.
No. What I wanted to say was 2 things. One is an observation, and second is a question back again to you. The first observation was in 1996. I was addressing the All India Conference of the Institute, and Mr. Malikan was chairman of the session. There were a galaxy of past presidents then. And I made a remark saying accounting standard setting is both a technical and a political process. But some people were upset by that. But in reality, one tries to get some, because I said you cannot lead if you don't have followers. You need to have an accounting standard which is capable of being implemented and followed. So there is a political process involved in it. But the second question to you, MPV, is, we have so far had all these standards over the years. All of these are, in a way, one size fit all general purpose standards. When will we see industry specific standards?
I think it should happen soon, PRR. Actually, and soon means not in the next 5 years, but I think 10, 15 years, few industries we should have. For example, we have for oil, we have. And for other industries, there is other literature which is evolving. I'm reasonably sanguine it will evolve, but I think on the basic standards itself, we have still not reached the stability. I think once we reach a bit of stability there, I think then we should start looking at those standards. But your point is valid, and I will definitely carry this message to the extent I am serving the profession. I'll do my best.
Thank you.
MBV sir, yes. There is a question from
Yes, sir.
Vijay Narayan Govind.
Yes, sir.
Can you please clarify regarding non-cancelable leases? As many leases in India seems to partake this character, and hence outside capital approach of Ind AS 116.
No, I think it's more an observation rather than a question. Let's clarify regarding non-cancelable leases. As many leases.
Yeah.
Okay. No, I get the question. Is it trying to ask actually? If you have got it, probably you can answer. I'm not able to.
I think the question is, are these leases permanent when you look at the period in terms of these being non-cancelable? So it is not, in a way, an onerous obligation. I think if in India they are non-cancelable and in substance they are non-cancelable, we need to take that period, including the period when it's likely to get automatically renewed.
Yeah. Yeah. The non-cancelable leases are all covered by the standard. The cancelable ones, they are not, they're left out. But I hope it answers, Vijay. I'm not sure if I've answered you correctly, but between Peter and me, if you got...
I think sir, what he is intending is that because most of the leases, they make it cancelable to stay out of Ind AS 116. That is, I think, that's what.
They will, but how will people do, Babu sir? Because let's say, for example, I'm taking an office space and I put so much of furniture fittings and all. Why would somebody take a risk of keeping it cancelable where the risk is so high? You put all your money, and why would somebody do it? So if some people do it, then we can't help it. That is a governance related issue.
Okay.
This is back to substance over form, I think.
Yeah. No, but again, many times we try to address governance through accounting. I think we try to...
My response, go by the spirit of the standard.
Exactly.
And say, what do you really see of the transaction? Is that transaction in substance non-cancelable? Then account for it accordingly.
Yeah.
Yeah.
I think that was...
Now I hand it over back to the organizers.
Yeah, thank you, Ramesh sir, for staying throughout this session and making this day very good. So, as a token
before you just give me a minute, because Babu sir had asked me to go, I had in between gone to an examination center in Ernakulam. Things are fine there, but turnout is, as they say, is less than 50%. Only 1/3 of the allotted seats are occupied. So many of the students seem to be opting for the Jan or the May exam. Just an update, live update from Kochi. Just for the information of the chairman, MPB, Babu sir, and the 400 participants who are still on with us today.
Thank you, Jomon sir, for the update. So, as a token of love and affection, we have a type of virtual memento. So, may I invite Ramesh sir to receive virtually, symbolically. So the branch, Ernakulam branch, will display the same on the screen. Okay, so please refer to your address.
This is...
Yeah, now we have the memento for the speaker, Vijay Kumar sir.
This is nice. So much of innovation. Okay.
And prove that you were in session and will reach you by post. We'll go. Thank you. We're taking only 1 minute for that.
So nice. Sir.
This is so nice. So long as corporate India doesn't take lessons from this and compensate their employees on a virtual basis.
You will get it physically, sir.
Yeah, this memento idea is from Jomon sir. Yeah, thank you, Jomon sir, for a wonderful idea. So, may I invite Secretary of our branch, C.A. Jigesh, to extend formal vote of thanks. Over to Jigesh.
Babu Abraham Kalivalil sir, Central Council member and Conference Chairman. C.A. Jomon George sir, Immediate Past Chairman of SIRC and Conference Director. C.A. P.R. Ramesh sir, Chairman Deloitte India and Chairman of the session. C.A. MP Vijay Kumar sir, learned speaker, Chairman of 9 of Kerala, Managing Committee members and participants. Good evening to all. Today is the 6th day of 9 days long Navaratna conference. This has brought in a festive atmosphere when economy is trying to make a turnaround after the fallout of COVID pandemic. We as directly connected to the business community are also concerned. But this program has succeeded in creating a welcome attitude of members. 9 days of enlightenment of members by leading speakers is something which could not have been thought about earlier. A couple of days back, after the program, my wife was asking me whether it is right to accept transfer of funds into own bank account for payment of taxes. It This program has also started enlightening family members as well, mostly when we participate from home. Let me thank Palakkad chairman for triggering the thought process for conducting such an event, and the two stalwarts of Kerala, Babu sir, Raman sir, for giving life and soul and making it a reality. CA Babu Arwam sir, an advanced controls the event. Thanks to you sir, for your involvement in successfully conducting this program. Raman sir is the soul of this program. He holds all the together, has taken up the responsibility for synchronizing the program. Thanks to you, sir. CA Ramesh sir has made relevant, reliable, and qualitative remarks as chairman of the session. Thanks to you, sir. CA MP Vijay Kumar sir, with his comment over the subject, has given an exceptional speech on the topic. Combination of knowledge with his presentation skills makes the participants attentive to the conclusion. Thanks to you, sir, for making this day lovely. Thanks to all the 9 chairmen. And finally, thanks to the participants who have honestly come in with 600 plus strength to make this program a runaway success. Thanks to all. Now over to Chairman of Kozhikode branch for concluding the session. Thanks.
So we pray to the Almighty that both faculties, that God gives the energy to serve the profession and to disseminate the information in future. So with this calling for the day, grade 8 was we have participants over 500 numbers plus, and next session is on Monday on the topic efficacy and efficiency of office